Good morning. Thank you for joining today's daily webinar. Today, we're going to discuss solo 401k fees, which deals with the type of solo 401k plan that you may open, whether it's a regular solo 401k, a self-directed solo 401k, or a self-directed solo 401k with checkbook / wire control. As always, please go ahead and shoot over your questions. We'll go over them here on the live webinar. We use these webinars to go over your questions. Also, today's presentation is for educational purposes. All right, let's get started. So again, we're going to talk about solo 401k fees today, and then we'll cover your questions. We'll be live again today at 1 p.m. Pacific time. We go live twice a day, typically at 10 a.m. Pacific time, and then a second time at 1 p.m. Pacific time. With respect to solo 401k fees, as far as how much does it cost to open a solo 401k plan and continue with the solo 401k plan, it's going to vary depending on, as I mentioned earlier, the type of solo 401k that you open. The different types to touch on again are regular solo 401k plans, which are typically offered by brokerage firms like Fidelity, Schwab, E-Trade, as well as some banks and insurance companies. Then you have the self-directed solo 401k, which is typically offered by a self-directed custodian like a trust company where they hold on to the funds. So they are not only the solo 401k provider, but they're also the depository taking institution. Then you've got the self-directed solo 401k with checkbook control / wire control, which is the type of plan that's the most popular, and it's offered by companies such as my solo 401k financial. The self-directed solo 401k with checkbook / wire control is very popular for many reasons. One is that it's low cost. Second, you get to choose where to hold the funds at. And then third, it's a full-blown self-directed solo 401k, which has all the typical features, such as being able to perform the mega backdoor Roth solo 401k, make both employee and employer Roth solo 401k contributions, process solo 401k participant loans. It also comes with the auto contribution credit, which is a $1,500 credit, which essentially results in paying for the solo 401k through government tax credits. So you essentially get your solo 401k expenses subsidized by the government for close to 7 years. So you can very well refer to a self-directed solo 401k with checkbook control as a free solo 401k because of the fees are typically covered as a result of having that auto contribution credit of $1,500, which is $500 per year spread out over 3 years in $500 increments. As far as continuing to speak about solo 401k fees, when we talk about a vanilla solo 401k offered by a brokerage firm such as Fidelity, Schwab, and E-Trade, those appear to be free solo 401k plans on the surface. However, brokerage firms may be charging some type of underlying fee that you don't see being deducted from the account. So on the surface, it may appear to be a free solo 401k plan, but it may not be a free solo 401k plan. It's just that you don't see those expenses because they are deducted in the background from the underlying unit value of those investments. What is more, the vanilla solo 401k plan does not come with the auto contribution credit. The second type of solo 401k plan with respect to fees is a self-directed solo 401k where the trust company holds the funds. They typically have a setup fee, and they also charge fees for holding the assets within the plan because they are the custodians. So they'll charge you safekeeping fees for holding on to investments such as cryptocurrency, precious metals, real estate, and so forth. It also typically does not come with the auto contribution credit, and those fees can range from a few $100s to thousands of dollars that the self-directed RA custodian, or I should say self-directed solo 401k custodian, charges. Now let's transition to the self-directed solo 401k with checkbook control. That type of solo 401k plan typically has fees. It can be from a few $100s to over $1,000 for a setup fee, and then there are ongoing fees, which can range from a few $100 to even in the low $200. Now, a company called My Solo 401k Financial does provide the self-directed solo 401k with checkbook control, and they don't charge high fees. As a matter of fact, their plan comes with the auto contribution credit, which again will pay for the solo 401k plan for 7 years easily because it's subsidized by the government effectively. And you've got checkbook control, wire control. You can invest in cryptocurrency, precious metals, real estate, as well as equities. You can also choose where to hold the funds at. They can be held at your local bank, brokerage account, the credit union. It allows for the Mega Backdoor Roth Solo 401k, which is $70,000 overall contribution limit for tax year 2025. You can also borrow from the plan through Solo 401k participant loans. They charge a fee of $650 for the first 12 months, which covers the setup of the plan plus the first 12 months of compliance and for being the plan provider. Their ongoing annual fee is $125. But they cover all the services going forward, including Form 1099-R reporting for distributions, conversions, as well as Form 5500 Easy, which applies once the market value of your solo 401k plan is greater than $250,000 as at the end of the plan year. So with the self-directed solo 401k with checkbook control, you typically have reporting that's handled by the self-directed solo 401k provider. A lot of self-directed solo 401k providers with checkbook control do charge a fee, an additional fee on top of being the solo 401k provider. They charge an additional fee for Form 1099-R preparation and Form 5500 Easy. But again, My Solo 401k Financial includes the preparation of Form 1099-R and 5500 Easy preparation for clients who timely requested. They prepare that at no additional cost. Now, the self-directed solo 401k, or should I say all these types of solo 401k plans, whether the vanilla solo 401k, the self-directed solo 401k from a trust company, or the self-directed solo 401k with checkbook/wire control, they all require that the individual is self-employed because a solo 401k is for those who are self-employed with no full-time W-2 employees that are non-owners who work 1,000 hours or more in the business. Don't confuse that W-2 requirement when you're self-employed business and S corporation, because with an S corporation, the owner is a W-2 employee, but because he or she is the owner, he or she can open a solo 401k plan provided that that business does not employ non-owner. So non-owner are the key words. Non-owner common law W-2 employees who work 1,000 hours or more. You cannot employ those types of employees that work that number of hours. Now, whether it's a vanilla solo 401k plan, a self-directed solo 401k offered by a trust company, or a self-directed solo 401k with checkbook control, wire control, it's important to understand that annual reporting applies, as I touched on earlier, depending on certain circumstances. such as distributions, conversions, the market value of your plan. There's also IRS reporting that comes into play, such as amendments to update the plan to full-blown require plan updates where you are required to effectively sign all new plan documents. Those types of requirements are necessary for all solo 401k plans, regardless of the type of solo 401k plan. Also, regardless of the type of solo 401k plan, that is a vanilla solo 401k, a self-directed solo 401k by a trust company, or a self-directed solo 401k with checkbook control, you are allowed to transfer IRAs and former employer plans to the solo 401k plan. You're also allowed to process distributions once you reach retirement age, which is typically age 59 and a half or older. You're also required to process required minimum distributions once you reach that age, which is age 73. So keep that in mind. Also, regardless of the type of solo 401k plan, if you make pre-tax solo 401k contributions, those are tax deductible. Whereas if you make Roth solo 401k contributions, those go in on an after-tax basis, meaning you don't get a deduction on your personal tax return for the year. However, the flip side is that those funds grow tax-free. So whether pre-tax solo 401k contributions or Roth solo 401k contributions are going to be tax sheltered under that solo 401k plan for as long as they remain in the plan. So again, let's review some items here. Typically, let's discuss what you get with a paid solo 401k plan, such as a self-directed solo 401k with checkbook control versus a non-paid solo 401k, such as a solo 401k, aka a vanilla solo 401k from a brokerage firm like Fidelity Investments and Charles Schwab. One, the self-directed solo 401k with checkbook control, as it states, you're going to be able to make investments by writing a check or by wire. You're going to be able to make both employee and employer Roth solo 401k contributions. More importantly, you're going to be able to continue to make pre-tax solo 401k contributions. You're also going to be able to perform the mega backdoor Roth solo 401k strategy, entailing making voluntary after-tax solo 401k contributions, which then get converted to the Roth solo 401k or Roth IRA. You're also going to get that custom type of support where, as long as you open the self-directed solo 401k with checkbook control with the appropriate provider, they're going to provide support such as helping you calculate contributions, also consult on the rules and regulations, whether contributions, distributions, investments, and so forth. They'll perform Form 5500 easy preparation, Form 1099-R, plan updates, and so forth. Whereas a regular vanilla solo 401k plan typically does not allow for the mega backdoor Roth solo 401k. It doesn't come with that auto contribution $1,500 credit. You also cannot process solo 401k participant loans and so forth. So again, we discussed the solo 401k fees today as it applies to the various solo 401k provider types out there. Looks like we have a live question here. Let's take a look at that. Again, go ahead and shoot over your questions. Please like our video, share it with others on YouTube to help get the word out to other solopreneurs like yourself, and go ahead and shoot over your questions. How does the filing of the Form 5500 easy work? What information is needed, and how do you transmit that back to the plan owner? So you would complete our Form 5500 easy questionnaire, which we provide to our clients to fill out upon their request, and that's how we collect the necessary information. We then register with EFAS so that it's filed electronically. We then assign it to the client to sign, and then it gets submitted electronically with the government. So it's a very smooth procedure. We do this on a daily basis, really. I mean, we're filing Form 5500 easies all throughout the year. This time of year, we're filing the most because this is typical this is typically when 450, 500 easy is in full gear. So that's how we collect the information. All right. So again, thanks for joining today's daily webinar. We'll be back again here at 1 p.m. Pacific time. Until then, have a great rest of the day.